You're listening to Toronto's #1 real estate podcast, powered by Watson Estates. The most successful local real estate investing starts right here, right now. Here's your host, broker, investor, and social media influencer, Bradley Watson.
Good morning, investors. Bradley here from Watson Estates. Today is June 30th, 2020, and thank you for joining us. We are #1 on iTunes, Spotify, and Google Podcasts for Toronto real estate. As we continue to dive into the news, as it kind of splashes us in the face, we're trying to figure out what is happening as COVID makes itself known across the GTA. And to research and study myself, I'm doing it anyways. Why not share what I'm learning as I continue to journey? And we have investors alike all across our great city who tune in, want to know what's going to happen with your investment, what comes next. And so today we have great topics. We're going to start off talking about what is everyone saying comes next for Toronto real estate. How's that for bang on? And then I wanted to remind you guys, what did the stats say in May 2020 and how have things changed? Because in a matter of 1 month, we have seen many big changes take place. So I want to remind you of where we've come and where we're headed if we were to look at the stats. And then I want to wrap this up talking about rents. And I know we talked about this a day or two ago, this idea of rents, and they seem to somewhat be stabilizing, but there's a lot of good. I found an article that has a ton of good reasons as to what we should be prepared for and what will catch falling rent prices in the GTA, because as you know, they've been coming down quick. So we want to know, where does our salvation come? Before we get into these topics, just the other day I was taking my girls out to the local splash pad now that they're reopened, and I was practicing my karate moves on the water. Now, I know I look like a goof, okay? I know. But you know what? The only opinion that matters is my kids. And they loved it. In fact, my daughter slept for 3 hours yesterday, the day after, for her nap time. Who's the goof now? Parents everywhere were like, oh, if that's the way, I'll do karate chops all day long. Put my kid to sleep. And with an infant, sleep is a commodity around here. All right, so let's get into what the market is doing. What are they saying? When I say they, I mean everybody. What I wanted to do is just get an overall feel of what everyone is saying. So I've taken info from the news. I've taken info from experts in the field. I've taken info from you guys on YouTube. And I want to get an overall feel on what's happening and what comes next for Toronto real estate. Now, the #1 news article of the day was a video, which drives me nuts because then I gotta watch an entire video when I'm just looking to scan and skim. But fortunately for me, it was like a 2 or 3 minute video from City News. And ironically, it was only 2 minutes of the entire video that talked about this particular subject. Like, I think the video was 3-4 minutes and they had some side topic, which I tuned out at that point. But what I find fascinating is these headlines, the #1, like if you were to just to listen to this snippet, I'm like, I want to know what people are hearing. Like we research this thing. We see every single day. We're tracking it. We know what's going on. But nobody else, if you didn't know what's going on and you were just to jump in and see this headline, literally the top article of the day for Toronto real estate popped up on your newsfeed and you clicked it, this would be the impression that you have of our market. So this is what they said, okay? Signals. So these are some of the signals. People are abandoning downtown looking to buy further out. This is the message. Now, what they did is they took that Zoocasa report we recently read a few days back about the detached homes and how they're growing, and that's great. That is awesome. They're saying, well, in Toronto, unfortunately, sales are down 13%, as if it's some kind of catastrophic thing. So why I find this fascinating is because you guys know, and we'll get into the stats, and this comes in our conversation in a moment, of what we saw last month. We saw 70% drops in sales. So if Toronto is down 13% year over year in sales this month, that's a celebration. But of course, they just take the raw numbers and they're not researching it. It's actually really funny to see people who are reporting on so many other topics jumping in onto the real estate debate, but it's okay. So they're saying people are avoiding commuting downtown, and instead, why would you, if you can not have to worry about commuting and you can work from home and it's cheaper, you don't have to go to the office, why not buy a place out there? And they're saying, look at all the condos. They actually said that. Look at all the condos. Talking about the trouble for builders and local businesses downtown, right? So they're talking about the repercussions of people moving outwards. And we've talked about condos in the past, so I think that's short-sighted with this as you build, because we've seen a lot of builds being delayed. So to stand on the side of, oh, look at all the condos, I don't buy that. I don't buy that for a second. And then there will always be a demand for downtown was kind of a last pitch comment. So, of course, you throw both sides out and you just leave it there. Very unfortunate, but I find it fascinating because, if people are not researching the market, this is what they're hearing. So what are the headlines? The headlines are, don't buy in downtown Toronto, or people aren't buying in downtown Toronto because they're down 13% year over year. Instead, people are moving outwards and businesses downtown are screwed, but there'll always be demand for downtown. That's the message. So that's one headline, okay? So that's the headlines. Now, I wanted to jump into what experts are saying. Specifically, John Pacella's had some great content. I love it. Love it. He made a tweet, and I'm not one to jump around on the tweeters of the world, but I dove into this article because he put post by post dissecting the predictions CMHC made. CMHC, the predictions that are in the headlines, the big guy. The reason that we had an article yesterday that was just trying to do damage control on what CMHC is saying is going to happen, well, that is now being dissected, and I love this. Before we get into what you guys have to say, I definitely want to check out what some of the experts in our industry are saying. So he highlighted two comments that came from CMHC. So one of them here said, home sales in the GTA will decline for the rest of the year and then start to recover by 2021 Q1 and show growth throughout 2022, a labor market. And then he said average house prices, he being CMHC, were on an upward trajectory during the time period leading up to mid-March. They will decline throughout the remainder of this year and into 2021. Homeowners, particularly those owning ground-oriented homes, will choose to keep listings off the market to see how market conditions develop. So this is what John says. CMHC has moved past forecasting the real estate market because they now know what, quote, will happen to home sales. So he's poking them, and rightly so. Because you're no longer forecasting because you know what's going to happen. Like, that's the impression, unfortunately, that's being given here. And not only that, we've seen the CEO, the president of CMHC coming out and making bold statements. This is going to happen. We got to watch out. Red flags. Watch out. Duck. So then he goes on to say prices and new listings in the future. Is this remarkable? This is a remarkable achievement due to statistics or a crystal ball. Who knows? Let's see how they're doing. And he goes on to study what they've said will happen and what the numbers have since said will happen. Okay. So when they say home sales in the GTA will decline for the rest of this year and then start to recover by 2021. Well, he's got a nice, pretty little chart here. He says sales have been recovering since April. And last week, this is as of June 27th, were up over last year's volumes. So not only have sales rebounded, but in the GTA, they're up, right? Now that Toronto is down 13%. I mean, in light of what? In light of them being down well over 60%. Well over. Things aren't moving the way CMHC expects them to. So that's number one. So you're wrong on that. Wrong on the home sales. Home sales are on their way up. In fact, they're rising year over year. Then they said CMHC average home prices will decline through the remainder of this year and into 2021. Okay. So he says this one's a tricky one because the volatility below is largely due to big swings in high-end home sales. This is true. This is why we need to keep in mind composite benchmarks. But I can confidently say home prices are not trending down right now. And they show a nice little chart that shows that. And you guys can go look at that if you want. But in fact, the home prices actually are sitting in his little chart here as of June 27th, pretty much in line with where they were, a little higher actually than last year. And what else we got here? So let's go next post. When CMHC says homeowners will choose to keep listings off the market to wait and see how market conditions develop. And I love how he says he's got it bold here, and will. They will. It's not like they may, right? You hear the confidence in their predictions here? Well, new listings have been recovering since April, and last week were up 14%. New listings have actually been going up now. Not only are they not holding off, they are increasing from where they were this time last year. You got to watch your heads, guys. So the verdict, according to John Pasalis on his Twitter account, is it's too early to say whether CMHC's prediction of the future will be correct or not. A lot can happen in 6 months, but given the trends so far and with inventory getting tighter each week, they may want to consider getting a refund on that crystal ball. Oh, love it. Love it. Number of showings going up. Activity is picking up. Numbers are actually up, which is interesting to see. And ironically, the numbers for June are not out yet. So coming to a city near you, the stats for June, just you wait and see. Let's see what a spring market in 2020 looks like relative to a summer market in 2019. Let's see what you guys have to say. Because if we're going to frame our thoughts here, we got some smart minds, and I love hearing all the counterpoints. Miguel, thank you for your comment. It's quite simple. Firstly, nobody knows what the future is. Everything is speculation. The ones who aren't in the market are speculating the market will crash to help themselves feel better. The ones who are currently in the market are speculating the market will continue to rise to help themselves feel better. I think you're right. That's a good point. There's your bias. You don't know where your bias is? There's your bias. Your investment tells on you guys. Prabhu, thank you for your comment. Genworth in Canada guarantee won't adopt CMHC's new mortgage rules, so CMHC prediction is wrong from their end, and that rolls out in the next day or two. We anticipate that's not going to have any impact based on several sources of data, but fascinating nonetheless. Not everybody, not even their competitors, agree with what CMHC has said and are doing. All right, Sanjay, let's get into some of the counterpoints. Cut your crap. Can I say that on the air? Probably. It's my podcast. Millionaires are on CERB and thousands are on mortgage deferrals. You never mentioned any of that. You think everything is all okay? Typical real estate pump of garbage. Guy, I talk about mortgage deferrals and CERB all the time. Like every podcast. That's all right. The viewpoint, though, coming out of this same person is all I know. This is not going to end well. That's fine. You can have that perspective. I love the stats behind it. And I've even seen listeners commenting on that particular post saying, why not? What is the reason? Because it's great. It's fine and dandy to say the market's going to come down. That's actually great. That's a buying opportunity, right? However, why? Give me a legitimate reason why I'm going to dump my portfolio, open up cash in order to dive into the predictions that you have. And if you can make a valid enough case, I'm in. Let's do it. Matt Sky, I love the comments that come from this guy. So funny. Prices to the moon. Woo! $3 million for a 1-bedroom. Woo! Pump it up. All aboard the gravy train. Next stop, poutine. This guy get me laughing all the time. Talking about taking out money from cash money to put it down on a property. That's so funny. I don't know if he's being sarcastic or what, but I find it really hilarious. So thanks for those comments. And then Sharing Lungs commented, I am genuinely concerned why the real estate has gotten away with false advertising. If the seller is never going to sell their property for the asking price and can even take it. So I love this point because it's valid, right? Like this idea of pricing your home for multiple offers and pricing them low. Right now is a good time to ask that question because it's happening a little bit less. But watch, over time, it's going to come back. What you saw earlier in the year is going to come back. At least in the short term, we'll see what happens Q4. But I think that's valid. Now, the way that we look at this, by the way, in real estate is this is I forget the legal term for it now. It's like a request for proposal or something like that. The way we price our homes is much like a store, like a convenience store, let's say. You can put a pack of gum for, let's say, $2. And if someone comes and say, okay, I'm going to buy it for $2, the store, this is my understanding, lawyers maybe check in and check my sources here. The store can say, we're actually not selling it for $2. It's actually $2.50. It's not labeled correctly. And this is what protects the store. Because if you were to say, it was so I know you Karens out there, you people are like, I gotta get me a deal. You'll drop the thing on the floor and say, it's damaged. Can I get a discount? Right? This idea of the consumer taking advantage, or like you move up the signs, you say, oh, it's $1.50. I want it for $1.50. The signs will, or the stores will often oblige because like they want to value their clients and they're doing it because they think it's a good business decision. However, if you say it says $1.50, they can turn around and say, no, that's actually $2. They have the legal right because even though they've posted this price, that doesn't mean that that's what it sells for. It sells for what they're agreeing to sell it to you for at the checkout. Now, it's the same here in real estate. So it's just you don't see the same attitude of people speculating the price up and pricing them intentionally low to do it in other industries. So I agree, it's kind of a disconnect. But the comment actually, it points to a bigger concern maybe in our society, because this isn't the only place we do this. It's just the only place you're seeing it on such a large level, dealing with tens of thousands of dollars in people's most important asset. Hopefully that explains some of it. This that's a flashback to back in school days when we were talking about that. So what am I saying? Okay, so we've heard some of the other people. We've heard the criticisms. We've heard the ups and the downs. What am I saying? Well, here's my advice right now to people looking in the market. If you are on the selling side, now is actually a very good time to sell, especially if you're looking to sell in the next year, right? Like if you're thinking between now and the end of 2021, let's say, right now is the spring market, and there's no guarantees the spring of 2021 is going to look the same as it does this year. There's no promises. In fact, it's pretty much a 50-50 coin flip depending on who you ask right now. So this is actually a great time to dump that asset. And I've seen a lot of people that are doing that, right? They're trying to open up the cash. Now, the majority are in it for the long term, and so they're not pulling this maneuver. But if you're going to sell, now is a great time. However, if you are buying now, I would say you want to have an expectation that you're going to be there until 2022. Don't go in. Don't day trade real estate right now if you're making a purchase. Go in it for the long term, which is always a good idea when it comes to investing in real estate. And we'll have to see how things shape up. Like there's a very good real chance that 2021 could be a great year if the stats continue and the mortgage deferrals are not a problem and this kind of thing that I never talk about. As I'm frolicking around in my splash pad of real estate. But I think we got to watch what's going to happen in September and October, right? In Q4, we got to be really careful. Keep in mind, seasonal fluctuations can also be drastic, which is why another reason I would say this is a good time to sell, because we see this fluctuation be 5 to 10% on a normal year. Like forget COVID. In a typical year, you got price fluctuations. It could range from 5 to 10%. And if this is our spring, which it is, this is the top. This is the top of our yearly price fluctuations. So in that reason alone, if in the next year you're looking to sell, this is a great opportunity. If it's a time to buy, if you want more opportunities, more properties available, this is a good time because the spring is always more inventory. But if you're looking for a deal, just hold out for a bit. Okay, guys? Just hold out for a little bit. And if you're doing both, then it doesn't really matter, does it? All right, so what do the stats show? So I want to move on to topic number 2. I want to bring some clarity on what we've seen when we looked at the stats for last month. This is more of a refresher because in the next week, we're going to see what's going on in June. So I just went back through memory lane. I jumped back onto the May 2020 reports and looked at some of these numbers, and it's jaw-dropping. So when we look at sales, let's say the number of sales, for example. So we know sales, Toronto down 13%. It's brutal, ridiculous, right? When we look at the stats for last month, detached down 63%. This is in the 416, by the way. Semi-detached down 59%. Townhomes down 55%. Condos down 58%. That's a great increase. That is a huge jump in 1 month. And if historics is any indication of the future, and there is nothing to stop this train for the next couple of months, watch out. Like, now, not to say things can't change. Things can change overnight. That's why we're doing this daily. But as of right now, I don't see an end in sight. We have seen a very fast recovery as it relates to the number of sales. So when we look at prices, what was going on in prices, and this is a little harder to gauge where we are today. We know prices in certain markets are going to do really good. If you missed our podcast a couple days back, we were talking about the detached sales and sales. Our prices were increasing. I can't remember the name of it now. You can go back and listen for that. But we have specific markets we expect are going to do really well, right? And we're kind of keeping an eye on that. But when we look at average prices in total, so GTA, let's say, the only area where we saw price declines was in detached, and it was down 0.9%. When we looked at semis, it was up just under 5%, townhomes up over 3%, condo apartments up 6%. So even last month, when things weren't so good, our prices were still pretty strong, and that was relative to 2019's spring market. Because just as we are now in the summer market, we are in the summer now, but it's our spring market this year. Our spring market last year was April, May, and like it is in a normal year. So May was a critical month. If we were going to see price drops, that was the time to see them. Not now when we've got a spring market on our hands. You think the numbers are going to go down? I don't know. Make your investments accordingly, guys. So overall, we see number of sales, got a little bit of a stutter going on there, in the condo apartments was down the most, right? The number of sales. But they are rebounding, and we even see new builds are actually finding, we've seen reports that new builds are selling their cheaper units quicker, right? And the reason that prices were up, by the way, in condos relative to the detached and the towns was because condos were raging into March. Like, they also saw the biggest drops. Like, as much as they're up 6%, their drops were actually more significant since March because they were on such a fast pace of growth leading up to that month. They still came out with a little bit of a shining halo above their heads. Does that make sense? When we look at composite benchmarks, it's the same as it was year over year. Composite benchmark was up 9.4%. So by housing type, we're up almost 10%. We've seen that all the way through. The average selling price for all home types combined was up 3% in 2019, since 2019. So there you go. So we weren't in that bad a shape in May. Like, of course, March, April, garbage. Halfway through March, halfway through April, garbage. Throw that in the garbage. But if we look at last month, it wasn't that bad. It really wasn't. The difference in year-over-year growth between the HPI composite benchmark and the average selling price was related to the fact that home sales in the city of Toronto, particularly in the detached segment, were down by a greater annual rate than overall sales in the GTA. This resulted in a compositional impact on the overall average selling price. Let me explain that to you if you missed it. Because detached homes in Toronto, which are typically more expensive, were not selling at a greater proportion than everything else, that brings your average price down for the entire region. However, the moment detached units begin to sell again, you would expect that to change. Well, reminder, we just talked about how detached are starting to pick up. And not only that, the amount of supply relative to the demand is getting tighter and tighter, which is going to lead inevitably to lowering months of inventory, which is going to lead to them being more confident to sell, which is a problem if you're banking for a bottom in the next couple months. There you go. That's the Coles notes. Let's watch, guys. Let's give it a week or two. Let's see what happens in June. I am seeing a ton of activity. I am anticipating my 2020 year as an agent is going to outpace my 2019 year. Honestly, it's weird because I had a couple of months that were quiet and now all of a sudden things are taking off. I see the increasing happening. And if at this pace, bring it on. I might have to install a little kiddie pool in my backyard. No, just kidding. I already got one of those. All right, moving on. Average rent prices in Toronto continue to decline. Now, we've talked about prices. We know they're coming down. And we've even talked about the same report. There are certain areas. So there's some stuff I wanted to grab from this article to add to what we already know, to put it in our back pocket on top of the info we've already talked about. Here we go. According to the report, average rents declined by 6% to 8% annually in North York, Markham, Mississauga, York, Oakville, and East York. But there are a few areas where the average rent is still up year over year, including Brampton, which is up 3.5%, Richmond Hill, which is up 2.8%, and Milton up 0.3%. So it's not consistent across the board, but generally we're seeing rent coming down. In Toronto, it fell 0.3%. Which is interesting because we saw steep drops. In here, they're saying 3.9%, but in other reports we've seen it was actually higher. It was up to, I think it was 6%, 5 or 6%. So what is happening here as we mapped it out and to bring everybody up to speed on where we're at so far is things seem to be slowing down as far as rent drops in Toronto. The rent is not dropping at the same pace. Now, obviously, different areas have different consequences. You got to know your region, of course. You got to track that yourself. That's why you contact people like myself, people who are informed in the stats and can analyze the numbers for you. But generally speaking, things are slowing down. They're slowing down as it relates to prices coming down for rent. And they actually have a really interesting chart that they mapped out here, and you can kind of see the bridge. Not that I can really explain it, but they've got like green and red. Red is actually higher, which is funny because it's like, oh, higher rent's a bad thing. And the lower rent's green. It's like, oh, that's a great thing. Nice and cheap. What a bias in the way people look at rents, right? But we do see that there has been, up till May, there has been a transition from the red into the green, meaning prices are coming down. So here are some of the big things that I took out of here that I haven't seen in other documents, in other news sources talking about this. And as we're continuing to think what comes next, I love these. So according to Matt Dannison, CEO of rentals.ca, he said this: It's likely that there is significant latent demand from young adults living with their parents, 30-somethings living with roommates, and retirees looking to downsize to an urban apartment. So these are some of the trends that they're kind of mapping. Dannison said rental rates may not fall further because the demand for rentals is expected to pick up once the lockdown ends. Recent graduates starting their career, people cooped up with their family or roommates looking for their own place, and the border opens up to foreign students, temporary residents, contract workers, and immigrants. When it relates to a reopening in an area that has COVID under control, you would expect these things. Things are going to start to pick up again. If you're going to try and find a bottom, where would you put it? You put it at the time when things are at their worst, right? So if things are coming off their worst, you would expect the same in the rental market. What's more, when the province's temporary ban on evictions is lifted, more supply could hit the market as landlords remove, quote, delinquent tenants, while others choose to leave voluntarily due to financial hardship. There's going to be a lot of landlords that say, to hell with this business. I know that's going to happen, right? And or switching to Airbnb. That's also a transition that could happen. Maybe we'll see a net balance between Airbnb and short-term and long-term supply. We'll see. But here's some of the things they say. The economic consequences of the pandemic have hit tenants harder than owners, with unemployment reaching record losses in May, particularly in the services, retail, and manufacturing industries. Before I read this last line, one of the things that's important to note is from what I've seen in these reports, the 2 to 3 bedroom condos, they've come down in price quite a bit, but they're also, the activity is actually better. Like they seem to be doing better than the little 1-bedroom apartments as far as vacancy rates and how they're finding tenants. So listen to this interesting point to summarize what could happen next. However, as the economy opens up, many of those jobs will not come back, and those tenants will look for smaller, cheaper suites, creating upward rent pressure at the bottom of the rental market. So if you're sitting on a unit that's small and you're a little freaked out, other than the fact that you're going to have a bunch of delinquent tenants running around, recognize that because people have lost their cushy jobs, they're now looking for any jobs in the city, which is going to push the lower rental market up again and hopefully catch us somewhere at the bottom. It's very interesting to see how this all worked out. Thank goodness this isn't happening in the buying and selling side, but I feel for the tenants and I feel for the landlords out there. Landlords will leave. And they have left the market in fear, I'm sure. But you know what? If you play near the pool, you're going to get wet. Or in my case, a splash pad. Just enjoy the experience and throw a few karate chops every now and again. Now, just take that illustration I just gave, and instead of water, it's raining money. What a wonderful career it is to own properties and to build wealth in an area that will always have demand in housing. Your customers don't even know they are your customers because all they're doing is living. What a wonderful business we're in. It is an amazing opportunity to speak to you guys every morning as investors here across the GTA as we continue to track what's going on locally. Hit that subscribe button, guys, if you've been following us for some time. Love on us. Give us a like. Leave us a comment. If you have any thoughts on what's going on in our market, I love to hear from you, and it creates an amazing dialogue with our family of listeners. I'll see you tomorrow morning with more. Take care and keep it real.